What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 10th of 2018. Well, folks, today I want to spend some time outside of my traditional daily updates or coverage of new exciting projects in the cryptocurrency space and spend some time really going back like we do from time to time again here on the DataDash channel, focusing in on the fundamentals of market cycles, the philosophy behind the psychology that exists within market cycles, and a few things you should be focusing on rather than what I know many people are focusing on. I gotta say that I'm very blessed, and at the same time I'm very humble, at the same time understanding, because I'm very thankful in my life that I've had the opportunity for the past 7 years to trade in a variety of markets before cryptocurrencies. I learned how to trade stocks at a very young age. I dabbled in ETFs, learning about how markets cycle, trading in bonds, being able to learn about foreign exchange markets, exchanging of currencies outside of cryptocurrencies. And along with that as well, getting to learn about how these markets operate as well. And I understand, and I resonate in a sense, because I was there at one point in my life where I didn't understand how markets work. And I still make flaws. Again, I want to reinforce that before I move forward, guys. I'm not trying to make myself look like a messiah. I'm just like you. I'm a person who's continuously learning, and I'm open to hearing different opinions. That being realized, I understand that this is the first market many people are trading and investing in with a serious amount of their money. And let's be fair, guys. I, just as much as anyone else, care about the tech of this space, but we are speculating and investing in this space if we have our hard-earned money in it. So because of that, I understand the concerns of people, and I can understand that some people want to make sure that they're making a proper investment in this space. So that being realized, and that sense of resignation being existent here, I want to spend some time to really help you all understand where I'm standing at the moment, but along with that as well, help direct you guys into what you should be focusing on in a sense. I don't want to tell you guys what to buy or what to sell. I want to show you guys how I trade and how I invest as an individual, and why in this space I'm so optimistic, why I've had a target of 50K Bitcoin this year, and why I think we're going to have a lot of solid fundamentals coming into the market. So the first thing I want to focus on is price action here. I understand that this is the key thing that many people are looking at. Again, when you're making an investment, you got to focus on price. But as we're taking a look here at this chart, we're taking a look at the daily here. And there's a reason I'm on the daily, and I'd be looking at the daily, the weekly, and the monthly, rather than what I think many people are looking at this moment. I have a feeling, I'm not going to speak for everyone, but I have a feeling that most people are looking at the 5-minute, the 15-minute, the 30-minute, the 45-minute, the hourly, etc. Shorter term time frames. And as we go here to the hourly, the reason why I want to press that is because I know that there's two things I've noticed when I've talked to people in the DataDash community. And again, I really want to press this to you guys because I am concerned for everyone in our community, as well as those outside who are getting into cryptocurrencies. The fact of the matter is I noticed two trends. I noticed that one, people get very concerned about short-term price drops and price gains. I mean, let's really think about it. For the past few hours, we saw pretty much a $400 drop down to the lows here for Bitcoin's price. And it came in when out of nowhere there was a decent amount of sell side volume coming in. But we've also seen as well in the past that we have these big spikes of $500 of gain in Bitcoin's price. We see it, and then between it we usually have these smaller short-term $100 to $200 drops spurred by small amounts of volume. The second thing I notice as well, not only are people concerned about this, but at the same time, they've also, as much as they're concerned about it and they're focusing on it, they also know that something's up. They know that something's being rigged here. And they understand that there is market manipulation going on. And they keep on pointing to market manipulation. And I gotta be fair with you guys, if you believe the case, you're not wrong. What's generally happening here, to give you guys a little sense of relief if you thought this is what was going on, or you were curious if this was the case, or you just don't know, what's generally going on, from what I've been able to tell, is that there are whales in the space who realize that this is a low liquidity market, which we'll be focusing on in just a second. And in this shorter time frame, they've realized that they can move market price on exchanges, which is what we use for the medium of a price index for Bitcoin. It's the only thing you really can use. And what they do is they go about trading a few thousand Bitcoin, either buying a few thousand Bitcoin or selling it on exchange. And then on things like BitMEX, they're using leverage trading. They're trading on margin. They're borrowing other people's capital to trade at a 3x, a 4x, a 5x, a 10x, whatever they're comfortable with, in order to reap the gains gains, the multiplied gains of trading on margin, trading with leverage, and they're able to make back any money they might have lost trading on the exchange by selling their Bitcoin or by buying it, whatever it is, doesn't matter. So that's a key thing. You guys aren't wrong if you're noticing the market manipulation. But it goes two ways in this sense. We not only realize that there are active traders out there who have, again, whether they like the fundamentals or not, have started to focus on trading in the short term. I also notice as well that we're all watching the short term. We're all focusing on what's happening within any given day, within any given hour, within any given second. We're really starting to, because of the euphoria we still remember back in November and December, we're still caught up and hoping to see those gains within an instant because we're used to it. And that's the thing about it is when you're thinking with emotion, you focus very much on the short term. And I understand why people want to see price action to the upside. I think we all want to see it. But the fact of the matter is we can see that people have gotten extremely short term in regards to this market. And I can tell you guys, it's the worst case you can find within yourself. And it's something you need to fix very quick if you fall down that loophole. And I'll tell you why. Because the people who usually win in markets the best are not the day traders. They are not the people trading in a very short period of time. There's no official number. I think people have tossed around like 85, 90, 95, or 99%. We'll do a ballpark estimate. Around 90 to 95% of day traders do not win. And if they do win, that 5% or maybe 10%, whatever it is, that small percentage usually will not win comparative to the real winners. It's not always, in the case of crypto and new emerging markets, long-term investors. It's the swing traders. The swing traders who play the market cycles. And I want to spend some time to you all today to talk about why the swing trader wins. And along with that as well, talk about some of the signs that as a swing trader myself, I do some long-term investing, and yes, I've done day trading from time to time if I want to dabble with it a little bit, but for the most part, why I stick to swing trading and why I play the market cycles. So let's go ahead and talk about this here. Many people have been pointing, they say, well, Nick, as we talk about the long term, there's nothing positive about it. I mean, if we take it here to the weekly, for example, we're talking about using the daily, the weekly, and the monthly. Look at this decline in volume in the market. We haven't been seeing new liquidity coming in. In fact, we can't even hold our previous levels. We're not seeing any single bit of trading right now in Bitcoin. We're not seeing new money come into it. And again, it's not a lie. You can see here that volume is coming down on the exchange. And many people see that as a negative. And I think in a sense that can be a sign that at the moment we're not seeing liquidity. So it probably means that at this moment Bitcoin is not going to move up. Okay? But the thing about it is that when you're playing market cycles, you need to be 2 steps ahead of the game. You need to get greedy when other people are fearful in markets, and there's a reason for that. Because if we take a look and really think about it philosophically here, and actually not really in a philosophical way, in a rational way, when we take a look at the price here, where was peak volume? Let's really think about it. I want to give you guys a second. Look at the chart here. I'll zoom out a little bit. Where did we see, in the given time frame of 2017, peak volume? Generally around this range here. We have some candle spikes over here on the sell side as well, and over here as well. But generally speaking, we see that as price rises, volume increases. I mean, you take right here before the beginning of 2017, you can see the volume number up here, right here represented here on the volume indicator. We were seeing Bitcoin being traded in early 2017 and before 2017 around the double digit or $100,000 range for Bitcoin here on Bitfinex. But you'll see it on all other exchanges as well that were trading, providing trading back during this time period. You see that there is an ascent, a rise of volume, even when price is going up. How interesting is that? We see that when markets move higher, even more liquidity comes into trading. It doesn't make much sense though, right? Because the whole concept is to buy low and sell high. And we all think, I think most people have the misconception that most people understand these simple principles. They don't. Most people do not spend the time to learn about how markets work because they're too caught up on making a quick buck on the short term, on the exuberance, on those December-styled gains. They want it to be easy. And they're not willing to learn about both the fundamentals and then also the psychology of markets. This is the big point I want to drill in here, folks. That when you have lower levels of volume, it is not a period to get fearful on something. So long as you're seeing price strength confirmation and you know the fundamentals are at play, you want to see lower levels of volume. You want to get greedy during this time period. Now, we do want to see higher levels eventually, but during the periods of low volume where the fundamentals are sound and price strength confirmation is signaling, you definitely want to possibly get greedy at these levels. Now, I'm not going to tell you guys to buy anything. I'm not going to tell you to sell anything. I'm no financial advisor in that sense. But as you all watch the channel, I want to share with you guys my philosophy and where I stand on this. Because I can tell you guys, even though price isn't exactly exuberant at the moment, it's not going to be in a low liquidity market where, again, we're not seeing any volume yet. We are still seeing some serious signs of price stability and price strength confirmation, the excitement of possibly seeing upside here at the current levels. Now, why are we seeing this, and what are some of those indicators? Well, first off, again, markets tend to cycle, especially in crypto, around a 70 to 80% correction after we have one of these major run-ups. We've had that. We had that going from 20,000 down to 6,000. We had a nice steady correction close to those levels. But along with that as well, I think many people don't realize what price is really telling us here. Many people are looking at the fact that, you know, we've been staying on the lows. We generally look at the highs and the lows. The big thing we should really focus on here is not only did we have a great year in 2017, but we really had a nice steady uptrend here, one that was relatively rational with the growth of adoption. And then we hit this period mid-November and then throughout December and January, where we just went parabolic. And there's an importance to keep it here on not the logarithmic chart, but the standard chart here, because it shows you when there's a period where things got too ridiculous, things got over the top. And you can tell that really the last base before we moved up like that was down here around the mid 5,000 range, okay? But we can see that, you know, I use this analogy as well, that you go, if, for example, this is when you're during a bull market, you're having a good time. It's what people use in regards to traditional markets as you got the punch bowl, okay? And everyone's having a good time. They're drinking, partying good, things are going good. And then eventually the punch bowl gets tipped over, or you run out of the punch. And people get hit by the hangover the next morning. The party's over. And it doesn't feel good. You know, many people were expecting that the party was going to go on forever. And then eventually you come down. And interesting enough, isn't it, that we saw the low at 6,000 close right around this level that we saw before we saw this level of exuberance, this level of irrationality in markets where things were going up too fast. There's no doubt about it. We see it come down, but we don't see it go below that. Interesting enough, have we really seen a low past that level since we've started this correction? We haven't. We have not gone below that big even. I'm going to try to get the specific here. It was exactly at 6,000 on a variety of exchanges. Not even touching the lows before we had the uptrend. And a lot of volume came in there. Because the people who understand markets know that once you've gotten rid of that exuberance, that's usually where you're going to find support for the next upside. And look at it right here. Let's really take a look at this chart here. Ignoring the fluctuations, look at the lows, because the lows are providing price strength confirmation if you think this is going to go up. A low here, a higher low, and a higher low. We might be seeing these periods where we get small rallies and then small corrections, but for the most part, we're wedging in with price here, and we're finding higher levels of support, which, if anything, is one of the most important levels of technical analysis that we can look at here. We are not seeing lower levels of price. And every time we bottom in the market, when we have a correction, whether it be very small or a little bit larger, we're seeing that over the past few months, ever since 2018 started, we have found higher bases than where we found in 2017. Outside of, I guess, again, that peak exuberant period and stuff. Obviously, you're going to correct those. It's going to come crashing down eventually because it's an irrational period of markets. Whereas back here, we were having a much more steady uptrend rather than the exponential gains of December. Okay. Now, we're at a period where volume is low, price is showing signals, we're wedging in, and we know on a fundamental sense, whereas a lot of people are caught up in price action, that's the only thing you're focusing on, we know that the fundamentals are sound, that there's something that could potentially lead Bitcoin to its next uptrend. All we need is what's known as a catalyst. It's a domino in a sense. When we talk about this in traditional markets, we talk about, for example, we've been talking about Italy, we've been talking about Argentina, we've been talking about a lot of European banks like Deutsche Bank, we've been talking about the asset bubble in the United States and across the world, and the real estate bubble, and all these different things. We understand that the fundamentals, when we do our real research, aren't looking good. They're flawed, and they are risky. But we know that nothing will happen until one of those catalysts triggers, until we have something that's going to topple over the domino and start the domino effect with all those other bad mistakes. And it can also go with good things as well. Sometimes you need something to start the ball on the optimism coming into markets rather than the fear. And you really think about reversal in a reversed way as well. What led to a lot of this downside? Well, in a sense, you needed a correction. That's obviously a factor. But we had the tether concerns. We had South Korean FUD. We had U.S. regulation worries. We had all these things coming in. India banning cryptocurrencies and whatnot. We had all this fear coming in. And now it's silent. The fears seem to have gone away. And we're only seeing, really, a lack of liquidity, but higher levels of price action for support. This is the period in market cycles where we look for those catalysts, where things are quiet. Once you've gotten rid of the fear, it goes to silence. And then what do you get next? You get upside. It's just waiting for one singular event, a catalyst. Now, we've been talking about what some of those could be. We've talked about a Bitcoin ETF. That's probably the most predominant one. And we've been obviously talking about a lot of the developments with Circle and Coinbase, and making this a much more liquid market, fixing the liquidity issue and getting people more interested, So we understand that the fundamentals are good. But I want to go ahead and give a good comparison here. And we'll bounce right back to Bitcoin here in just a moment. But to talk about this, because I understand what many people are feeling is that it should have come by now. Okay, many people have that feeling of, I've been holding Bitcoin here. I might have gotten it in December. I might have gotten it earlier. I might have gotten it over the summer or years ago. But I feel that it's over. It should have made a move by now. And this is the exact same thing that I find within commodities markets. We've been talking about, again, all the negatives in traditional markets that could be a catalyst as well to inspire other hedging assets, things to bet against those traditional systems, such as gold, silver, and cryptocurrencies like Bitcoin. We've been talking about how bad they are, and people have just been seeing markets continue higher. I'll give you the example here with precious metals to really build a relation here. For the past few years, many people, whether they bought back in 2008 as a speculation, as a hedge against traditional systems, or up here in 2011, many of them have either been down on their investment or relatively neutral or with little gains in gold. And it wouldn't be very good because many people would look at that and they say, look at all these markets. We know the fundamentals are flawed. We know it's bad, but they keep going up. And I'm sitting here with my precious metals. And it's not doing well. That doesn't seem fair, does it? Well, I can tell you all that when people, and you can tell this through web forums, you can tell it in the comments of videos, you can tell it by talking to people who fit into this boat, that every time in markets, when it seems like things couldn't get any worse and you have to pull out of the game and you're just tired of waiting, and then you step into those overvalued markets, not the commodities, the stocks, buying other assets, it is right at that moment when you are going to step out of what is a winning opportunity right ahead of you. And you can see that exactly in gold. I've been seeing it in the personas of people who've been holding for all these years. They're getting out, and look at what the price is doing. It's signaling higher lows. It's signaling an ascending triangle, which is one of the most bullish patterns you can see in any given asset, currency, whatever you're trading. It is setting up for a breakout against a resistance level it has been fighting since 2013, and the support and the volume is showing it doesn't want to give up. And these markets take longer than cryptocurrencies. You take a look at silver, though, as well. Take a look at silver here. Silver, which had the same exact thing from 2008, moved all the way up to almost $50 for this ETF. That's almost a 4 to 5 times multiple if you got in the bottom. Even if you didn't, 2 to 3 times within the period of time silver saw it. That's amazing. But obviously, people have been holding. Many people bought up here as well and are on the downside at the moment. And they've been holding, waiting patiently. And now, right at the moment when everyone's leaving, look at silver here. It's building a wedge on the weekly here. We've seen higher lows, lower highs. The price is coiling in right under all the moving averages. The 200 week is sitting right at the candle. And if silver can get a breakout above there, if we can see some upside, the same as the 200 day as well, if we can get a breakout above this and a rally in such a thin amount of price range, a catalyst that can push it high enough, this thing could go like a rocket ship. But we need the catalyst. We need something that's going to push it. The price action is signaling that that catalyst is coming soon. It's got to make a move to the upside or downside soon. Something's got to give. And this is just how markets work. It's the magic of markets, guys. It happens all the time. And now we're getting in that exact same position here. We have the wedge in Bitcoin, the higher lows, the lower highs. Price is going to either make a strict move to the upside or potentially to the downside. I'll tell you this though, when you tendently have around a 60 to 70% correction in markets, in a market that's got a lot of people excited that millions, if not billions of dollars are being invested into outside of the cryptocurrencies themselves and the infrastructure and the research and development of blockchain technology, directed acyclic graphs, all this great tech that's back behind these cryptos. That's the moment that markets are getting ready to look for a catalyst, and it wants more upside. So it's just a matter, guys. It's just a matter of being patient and understanding this. This is why I'm so excited about Bitcoin and cryptocurrencies for the rest of 2018. Why I'm so exuberant, because I get greedy when other people are fearful. It's just how markets work. It's always worked for me. It has always been my greatest ally. And it is very simple to trade these cycles rather than those short-term time periods, or to just hodl and wish for the best. So, that being realized, everyone, I hope you all found this video great. From time to time, again, you guys know I like to spend some time to talk about these things, to share a few points, to rant and rave about my views on the markets. But again, we'll have to see what happens over the next few weeks. I'm remaining patient. But again, as we look at this wedge, something is probably going to happen this month in June or July. We can see the prices getting tight. It's either going to be a breakdown or we are going to see something to the upside. I have a feeling it's the latter of the two. That being said, everyone, thank you all so much for watching, and I'll see you all in the next video. See you soon.